Hello students, welcome to today's maths class. Hope all are doing great, and we are going to discuss very important concept application of calculus in commerce and economics. Okay, the main objective of this particular topic is how you can apply calculus to study the problems related to commerce and economics. Okay, calculus, we discussed about the differentiation, right? In calculus, differential calculus, it's all related about differentiation. So we are going to apply that concept in economics and commerce. Okay, such as the phenomenon like break even point. Okay, how to maximize the profit, how to minimize the price, elasticity of price and supply. So all these things we are going to discuss here. Okay, how the calculus is applied in the commerce and economics. Okay, students, very important topic. You can expect problems in multiple choice question as well as in the section B problems. Okay, focus. Okay, and if you have doubt, you can send me a message. I'll definitely get back to you, students. Okay, in the previous video we discussed about the annuities, the present value. Okay, still you have any doubts, you can send me the message. Okay, good. Okay, so here we go. Before we get into the formula, we will study some of the functions related to business and economics. Okay, the first one is the cost function. Okay, cost function, okay, it has been broken into two parts. Okay, one is the fixed cost, another one is the variable cost. Okay, so the total cost, the formula is fixed cost plus the variable cost. Okay, this is the formula you're going to use. C of x is equal to f plus v of x, where f stands for the fixed cost, v stands for the variable cost. Okay, students, and what is x actually? It is the quantity produced of certain commodity. Okay, x represents the quantity produced of certain product. As I told you, the total cost is broken into two parts. One is a fixed cost and here is the variable cost. Fixed cost from the name itself, you can say it will not change with various levels of production. Okay, the cost will never change at any point of time during the production. For example, rent. If you're going to take a rent for a factory, it's not going to change. Insurance, interest, depreciation, all these things will never change. So that is called fixed cost. Variable cost is, from the name you can say, it keeps on varying as various level of production. Okay, the material cost will vary, right? When you're going to manufacture, for example, a pen, okay, the material cost might vary. This month you might pay for the refill particular amount. The next month it will cost another amount, right? It might vary. The material cost will be varying. Advertising expense, it's all will vary. Okay, that is called variable cost. So the cost function, the formula is fixed cost plus variable cost. C stands for cost function, or you can say C of x, which is equal to f plus v of x. Okay, so where f is your fixed cost and v of x is your variable cost. Okay, so for example, if you have the cost, total cost C of x is 3x cube plus 5x square plus 100. Okay, this 100, it's going to be constant. 100 is a constant term, whereas okay, 3x cube plus 5x square is going to be the variable cost. Okay, students, demand function. Demand function for the product is dependent upon the price. Okay, obviously, if the demand, how the demand of the product can be determined. If the price is less, automatically the demand for the product will be more. If the price of the product is more, the demand will be less. Correct. So the demand function always represents relationship between the demand and price of the commodity. Okay, next important definition, revenue function. So what is the meaning of revenue? Revenue is the amount received from the sales of goods. Okay, whatever product you are going to sell, the amount, the money which you are going to receive is your revenue. Okay, the formula to calculate revenue is R is equal to P times X, or you can say R of X is equal to P times X. What is what is P actually? P stands for selling price of the product. X stands for number of selling units. Okay, so multiply these two will give you the revenue. Selling price times the number of units sold, number of quantity or number of selling units. X is your number of selling units and P is the selling price. So remember this important formula, R of X is equal to P times X. Next, profit function. So what is the formula to calculate profit function? Profit is equal to total revenue minus total cost. P of X is equal to R of X minus C of X. R of X is your revenue function. C of X is your cost function. Okay, students. Then very important topic, break-even point. At break-even point, there is no profit and there is no loss. So break-even point means the company will not have any profit or it will not have any loss. That is the break-even point. So we know the profit function formula, right? R of X is minus C of X. What is R of X? Revenue function. Very good. What is C of X? Total cost function. What is P of X? It's your profit function. Okay, so at the break-even point, P of X will be equal to 0 because there is no profit, no loss. So if I put here a 0, 0 is equal to R of X minus C of X. So minus C of X, if it come to the other side, it will become positive C of X. So which means R of X is equal to C of X. Total revenue is equal to total cost. Okay, students. So this is the formula to calculate the break-even point. R of X is equal to C of X, where you don't have any loss or you don't have any profit. So in today's class, we just discussed some of the concept, okay, some of the terms used in the application of calculus in commerce and economics. Okay, so first we discussed about some of the business terms, right? Cost function, very important. Cost function is fixed cost plus variable cost. Fixed cost means it is fixed. Variable cost means it varies. Okay, and then I given you some examples. Similarly, we discussed what is the variable cost. Example is advertising expenses, material cost, labor cost. All these comes under variable cost. And you also have the cost function. I have just given an example. If this is the cost function, your fixed cost will be 100, which is a constant term. Okay, your variable cost will be this, right, students? So this is the perfect example for fixed cost and variable cost. Okay, the total cost is divided into 2. All right, and then we also discussed about the demand function, the revenue function. What is the meaning of revenue? Revenue is the amount received from the sales of goods. So this is the formula you have to remember. Okay, R of X is equal to P into X. P is your selling price of the product. X is number of selling units. Okay, students, and profit function is total profit minus total revenue minus total cost. That will be the profit. P of X is equal to R of X minus C of X. And break-even point, what is the meaning of break-even point? There is no profit and there is no loss. Okay, so R of X will be equal to C of X. Okay, students, so I request all of you to write in your maths classwork, okay, and go through this. Tomorrow I'll be uploading some problems related to this, okay, students, and stay focused. Whenever you get time, please please watch the videos which I have uploaded from algebra till till calculus and commercial mathematics. Okay, all these topics, just log into VLE and keep yourself updated and stay in focus in studies. Okay, students, have a good day. Thanks for watching the video. Bye bye.